I think we'd all like to make money and be rich, and we'd all like to do this while spending as little time and effort as possible. Unfortunately, life doesn't tend to be that easy. Index funds, on the other hand, do provide an elegant solution as a means of consistently achieving profits with little to no work. In this video, I'll be sharing what I think are the keys to investing in this way so as to maximise profits and avoid the common pitfalls. As always, everything will be explained from the ground up so absolutely everyone can understand. And as an upfront conclusion, the way to enjoy success is to start as early as you can and then proceed to forget you ever made an investment so that you leave it alone. As always, an early thumbs up would always help, helps push the video out to more people. But with all that said, let's get on with the video. I want to first start by setting expectations. Index funds aren't going to give you the glamorous 200% returns that you may be thinking of. Those come with hard work, research, and usually investing in individual stocks. Index funds do, however, provide consistent returns that are much, much better than leaving your money in a bank account, particularly if you're going to leave it for a number of years. If you didn't know, money in your bank account shrinks in value, and I made a video to explain exactly that, which I'll put on screen somewhere now. Now, the actual rate of return of index funds is a contentious topic because past performance doesn't necessarily predict future performance. However, what's commonly quoted is about 5 to 10% a year when averaged out over a 10 to 20 year period. So what's really important to note from this is that if, say, for 1 year you're up 20%, it's not uncommon for you to lose 5% in the next year. And that's totally normal, and that's part and parcel of this tried and tested method of index fund investing, which is both profitable and requires little work. So if you are losing money, even if you invest in your first year, or if you're losing money in consecutive years, not to worry, that is normal, and you just need to ride it out. The key is to stay in the market long enough to have your good years outweigh your bad years. And history has shown that that does happen time and time again. And the way to be able to stick around in the market is to not need to touch your investment pot. So you should only ever invest money that you don't need. Now, as always, this isn't financial advice, I'm just sharing with you my opinion. And this is in fact what I did. So I only started investing in the stock market once I had money saved up for emergencies and once I had some money put aside for things that I knew I was going to need to spend money on in the future, like a new laptop or a new phone when they do eventually break. Because it meant that when I did start investing, I wouldn't need to then pull my money back out of the stock market if I was pushed or strapped for cash. And being able to leave your money alone and maximise the time during which you're invested in the stock market means you're able to ride the ups and downs of the market. But it also means that you're able to utilise what Albert Einstein calls the eighth wonder of the world, and that's compound interest. So to maximise your time in the market, you need to A, start as early as you can, and B, not sell. And not selling sounds so simple, but it's actually so hard because we think we can try and outsmart the market, try and make some clever decisions and do better than we otherwise would. But actually the evidence shows that we're really bad at doing that. And I think this was really nicely illustrated by a study done by an American investing platform called Fidelity. And they looked at their account holders to see who performed the best during the period from 2003 to 2013. And what they found is that actually the account holders that did the best were the ones who were either unfortunately dead or who were totally inactive and weren't using their accounts. And what this means is that the people who didn't touch their stocks at all were the ones who did the best. And interestingly, this wasn't a period where the stock market simply went up and to the right and it was a perfectly green period. This came after a recession in 2001, and it also included the 08-09 crash. So there was plenty of volatility in the market, and volatility presents a really unique opportunity for investors to make money because you can get in at low prices, even though they are times of economic hardship. But the people who didn't bother to look at any of that and just held their positions for this whole period actually performed the best. So what do I think are the take-home messages from all of this? Well, I think to succeed in this hands-off method of investing, you need to be exactly that. You just need to be hands-off. And I think that this method, which is low on work, you don't need to know much, you don't need to do much research, it's perfect for beginners and people just getting started, which is why I'm so passionate about it and why I think more people should be doing that. As always, the information on my channel is not financial advice. I'm not qualified to give that. It's purely my thoughts and my own experiences. I really hope you enjoyed the video. If you're new to this world of investing, I have a very short playlist talking about index funds, which I think will be of interest to you, explaining what they are exactly and taking you through the first index fund that I invested in myself, with everything that I think you would need to know about it. As always, if you've enjoyed this video, please do give me a thumbs up down below and subscribe for more videos like this. I'm really keen to try and get people investing in the market as soon as they can. So if there are any reasons why you yourself haven't invested yet, I'd love to hear from you in the comments section down below. Or if you have already started investing, I'd be super interested to hear what you've invested in and why. But with all that said, thank you ever so much for watching. I really hope you enjoyed and have a lovely day.